What's going on, everybody? My name's Jason and I'm here with X91Investing. In this video we're going to be talking about technical analysis. So as we know, we have fundamental analysis, which is the more kind of news and all that, all related to specific companies, specific countries, all that kind of stuff. And then we have technical analysis, which is just price data, just index data, so we see down the bottom, and just the general action of the price, candlesticks, all that, analysing that and formulating a strategy off that. So that's basically what we're getting into this video, so come on, let's have a look. Right, so we're over here now in TradingView. So TradingView, as we know it, is the charting platform, the best charting platform. I stand by it in every avenue of trading. TradingView is the go-to charting platform. And a charting platform is where we do all our technical analysis. And that's what this video is about, as you can see in the intro. So what we're looking at here is my more recent analysis on the euro-dollar pair, right? As we can see, we're looking at a 15-minute chart. This is really small time frame. When it comes to any form of trading that's not scalp trading, this is the absolute lowest you should ever go, because the market noise just gets way too low. When you go down into the 5-minute, 1-minute, second charts, I don't even think I have access. I can't even get access to the second charts because I don't have the premium plan. But if we go and throw on the 5-minute chart, say, right, we get a hell of a lot of market noise, and it's hard, like, it's just all, it shows a lot more of the movement. Like with the 15-minute candle, it condenses the 5-minute candles into all 3 5 minutes into one. When we take a 15-minute, it takes 4 15 minutes and puts it into one candle. When we go up to the hour, 4 hours, it's 4 1-hour candles, and so on. 4 hour to the 12 hour, it's 3 4-hour candles smushed together, day charts, and so on, right? So I'll just explain some of the analysis that I've formulated for these trades. If you were looking at my Instagram story, I logged these trades. So basically last night I posted that I was going exiting the trade here. So this is literally at about 1:15, so like 1 o'clock. I think I actually posted the story at 5:21, and this is just basically where it was. Then this morning we saw a bit of, like, I exited the trade because of this triple bottom formation here. So the triple bottom formation was a little bit, it wasn't perfect triple bottom, but it did follow. It followed the kind of the way I analysed to get a triple bottom. So a triple bottom, I got out of the trade then, because a double bottom is a reversal pattern to the upside, and a triple bottom is confirming that there's a lot of or a lot of support being formed at that level, and it's going to shove the price back up, which it did. But it revisited this level that it was after creating off of this resistance level that was and it was technically support found here that turned resistance. So we'll leave that back there. So it's support that turned resistance. When it came back up, I was there. And what we see here as well is, I'll just mute that phone because it'll keep going off in the video. We have, so it came back up and revisited. But what we can see here is, if we zoom in on this, get it up lovely and big, we can see there was 2 dojis. And if you've been here for the live sessions or whatever, I explained what dojis mean. A doji candlestick is a candlestick where the open and close price of the candle are very close, or exactly on the same level. And we see 2 of them here. And when we see a doji, we see price indecision. And we've seen a rally in recent time to the upside. And there's indecision in an upside rally. It's an indication that the price is going to come back down. So just off of that whim, coming off a resistance, and if we look at the 200 period moving average, you can see that it's after hitting it. It's after coming up to it again. So what happened? It came up to it here, came back down. It was floating around on it, and then it broke through, came down, retested. So now we're kind of saying this is now a downtrend based off of the moving average. And if we scale up to a bigger chart, we can see we've been downtrending with the last couple of weeks. So, and this was the top formation of the downtrend. So we had a head and shoulders pattern. This is me doing a bit of a live demonstration of what technical analysis is. We're going to have a look at a few indicators in a few minutes as well, but basically explaining this little bit of analysis here off the trades that I took, we came back up to it, and so we revisited the support. So we found resistance at the moving average. So the moving average is just the average of the price over the last 200 periods I have it set to. So it's a very general one. but I find that it's a good one when price does, like, it doesn't. I don't always look for, part of this strategy is using. So a lot of the time you fit a strategy to a situation. So I fit my 200 period exponential moving average strategy with other parts of strategies together to formulate an entry. This was a little bit off a whim. I saw a double doji. I kind of got excited. We came up to the moving average that we found resistance at before, so I shorted, and down to the exact level that the one for Wednesdays. So today is what, the 19th. Yeah, today's Friday. So Thursday's trade. So what happened here in this location as well? We need to understand this as well. I shorted off of a bearish engulfing candle, right? We were at a high. We were after getting to the high. So we weren't actually after getting to it, but there's a couple of situations here where we did find resistance and pulled down off it. So when we hit it the fourth time and we got the bearish engulfing, that was enough selling pressure to tell me that was time to get in. So I got in. Price came down, hit this level of support from previous resistance. So from these kind of levels back here, not a very, very strong level, but it did hold true. So it came down, but it came up and retested that support or that resistance level, but it didn't stop me out. I have a fairly loose, well, not loose, there's only 13 pips of a stop loss, but there's a decent stop loss level on this, and it didn't stop me out, luckily, because look where the trade went. I accidentally moved that. It went completely in my favour, and last night I put the profits here because of the triple bottom, because triple bottom means goes to the upside. So and then it revisited the level, support turned resistance, retested the resistance, came down, and look where it's after coming right down to this level of support here. We could be heading down for this one, so we'll actually just quickly mark that in on the chart and just have a check on Instagram. You might see something posted about this later. I'm not in a position currently. I was thinking about getting in off this red candle, but it's not an engulfing candle. It's missing the wick at the top. This one technically would be doji here, but I've been preparing for the video, so I missed this kind of little bit of setup here. So this actually wouldn't have been a bad trading setup here, so we could have gotten in on a nice position here. The doji, we'd be getting in about here. Then look, it's not a great trade. You'd have your stops here, like you have 20 pip stops. Like you'd want you'd be at least targeting 50 pips, which is definitely busting through that level. But the two main trades that you would have been profitable on were these two, because this one, like, you're going to be taking a trade to this level pretty much. Like, you're not going to be targeting this for not until next week anyway. Like, there's a 2.3 or 54 pips. It's going to be hard to get there on a Friday, because markets aren't big movers on Fridays. Like, we have this position was a 40 pip position, so this is a risky. It's not risky in the traditional sense of a risky trade, just hopping in or whatever. Like, there is a reason for an entry there, but personally, look, I might have hopped in on it. Like, that would have been a much better entry, but there was no reason for entry there. This would have been a trade that would have been worth taking, targeting this level. Because you have a decent, look, you have a 10 pip, 11 pip stop with a 30 pip profit. It's not a bad one. Will it get to that level? We don't know. So right, we'll clean up the chart. We'll hop over to a different one. We'll open USDJPY and we'll knock it back. And this is where technical analysis, right? So actually, if you were here for the live session, you will have remembered this way of identifying an uptrend that we went over. It's not a very common way, but it's for graphically it adds a nice little. You're actually catching when it's more of a concave uptrend. It's a kind of a way of, I do have a standard uptrend, it's trend direction line, but when we're looking at technical analysis, so if we completely clean up this chart, so if we go remove drawings, so we'll keep the 200 period and we just take the auto fits to scale or auto fits data to screen, that one off, because then we have full control over the chart. So if we look at this, we're looking at this on the hour now. We'll analyze it on the day. So we can see here huge uptrend here. So we know that the price is going up, right? So we can tell that. We can use other things called the FOREX Indices, and we can go to the Japanese yen index and see there's a lot of understanding as to this is the currency index, this is the strength of the yen as the yen itself, and we have the USD as the other half of the pair. So what I usually do is when I'm analyzing indices of currencies, I would open the pair I'm thinking about trading, and then I click this little circle and I'll put in the JXY, and we'll click on that data, we'll move it, the 3 dots is what we need, and we go move to new pane below, right? So we put it down here, then we go and add another one, and we get the Dixie, the DXY, right? And we add that, and then we add that price, or that line chart, move to existing pane below, so we can see the price, the strength of each currency over time. So there was a crossover here, and when we see a crossover, it means that they're equal in strength. So when we see the blue line is the dollar index, right? So when we see the blue line go up, the dollar is strengthening, and when we see the orange line going down, we see that the yen is weakening. So when we're trading a pair where we have the USD and the JPY, when we see the blue line pulling up through, we can see that the dollar is strengthening since about here. So we can see that there's a lot of strength. The dollar has been strengthening, well, the yen has been weakening, so that is the result of this price moving up the way. So over, say, from here, we can see that the yen has been consistently making lower highs the whole way down, and we can see that this has been consistently making higher highs and higher lows. So the strength of the dollar has overpowered the yen, and that's the reason this chart is going up in that fashion. And we can just reset this, take the percentage off that, so we can actually still see the price. But that's how you can use the indices as part of your technical analysis as well. There's going to be loads and loads of parts to this technical analysis series, because there's so much, but this is the fundamentals of any forex trading plan that I have involves having the indices of the particular pair located down at the bottom, and I just set them up. So over the last couple of weeks I've had these ones marked in blue, because if I just go over here to the blue list, I have my I usually mark open pairs with open positions with a certain, I usually, whenever I select, if I just go into a normal list and I want say I open a position on the Swiss franc, I put it on the green list. So it doesn't matter if it's long or short, I just put it on the green list so I can hop in and check things like that. They're all there handy, so I'll just go back in here. So I have all them, take them off, they're kind of obsolete. I'm not in any positions at this point in time. Fridays I usually kind of look, there's actually, for a Friday now, there's a lot of movement, especially when we look at, say, like the pound has dropped a good bit. So we're looking at the daily chart. There's ruler, we've travelled today alone 80 pips on the pound for a Friday. That's a massive move for a Friday, to be honest, in my opinion. Euro USD, this week alone, there's been huge, there's been fluctuation of over the days. This is all stuff that you will have to be keeping an eye out for, an average. So this week we've been moving 100 pips up and down. So it's not a huge move for a week. This week would have been it's not a week, but say from here, 1, 2, 3, 4, 5 candles. There's that was an extremely bearish week, and there's 209 pips, 200 pips. That's a decent move for a week. So swing trading forex is a very, very viable strategy. If you fair enough, you wouldn't catch, you wouldn't have caught that's not a bearish engulfing candle. So there'd be no entry position on a daily chart. So if you were swing trading, you'd be trading on the 4-hour chart, and you'd be looking, and then you see, doji, boom, there's a nice entry position there. So we have the doji with this and this, so that would have been a nice swing trade position. So you could have cut that right down to you could have formulated resistance or support in this location. But you understand that's a fundamental part of my, and obviously the indices will change the more you scale the charts, because the index is based off of the time period that you're actually trading with. So like if you change this to the 1 hour, we're going to see different price action, and the smaller time frame you look at it in, the more choppy it's going to get, the more of these big big wacky lines that you see all over the place. So it does give a good idea of the strength of a currency, and that's the big thing with the indices. You get a good idea of what one is strong, what one is weak, and it's like that is the way they work. So, and they plot them into intersections and all that kind of stuff. That's, it's one of the secrets, and I don't see many videos on Forex indices, and they're a quintessential part of any of the strategies I employ, because they give you so much information, and it's just general market information that us as retail traders, we don't have much control over the markets, but the banks and all that, that's the stuff they have looking at. They're looking at they're more fundamental. They wouldn't be sitting there analysing. They have their technical analysts on site and whatever, that where they have where they are looking at charts, where they'll be catching the little micro bits of information. But for the most part, they do trade off of indices and the strength of economies and all that kind of stuff. So look, lads, I hope you enjoyed this video. This is very, very basic technical analysis stuff. I did do a little bit of a live breakdown of the euro dollar chart, what you see here, but which is I found in my experience anyway, seeing someone else analyze a chart and having a mentor explain something like how they analyze something is the way I learned the best. And having a mentor tell you that kind of stuff, it really, like, you can ask and understand stuff, and like, whereas you look at a YouTube video, they can really, really just glaze over stuff and not actually really dig deep into why this is a triple bottom, why this is a retest of support and all that kind of stuff. It's the why rather than that's what happened, so that's what I'm all about. I'm all about the why, because that's the big question I always had when I was learning, is why, because I'm a real practical thinker. I understand through doing, as well as I understand through actual being explained to in depth. Like, I don't want to know why I don't want to know that price got up to that level. I want to know why it did, because there was more buyers in the market. When there's more buyers, price is going to go up, because there's more when price goes up, there's more supply, there's more demand for the limited supply, so price is going to go up. When there's more supply than the demand, price is going to go down because less people want it. That's the why as to why price goes up and down. But to actually be able to trade, you need to understand that stuff, not just know that that's what happened. You need to know why that happens, and that's what I'm mad about when it comes to trading. So look, I hope you enjoyed this video. Thanks very much for watching. If you want to see more stuff like this, definitely subscribe down below and turn on the bell, because I do a live session every Sunday at 7 p.m, so you definitely don't want to miss out on that. Anyone that's given me feedback on it, I've all said it's very, very valuable. And yeah, sure, look, if you want to hop over onto Patreon, I have one-on-one mentorship. I have a course that I have about 10 lectures done on now. They'll all be going up this week, so I'm just wrapping up a few little bits to it. I had to re-record one of them and stuff like that, just little complications, but there'll be about 10 episodes of that course up day one. So if you want to enroll on that, just keep an eye out. I'm actually doing up a website as well, so that'll be live, and that'll replace my Linktree thing that I have on my Instagram page. So I'll actually have an official X91Investing.ie is the website. So when that goes live, you'll be getting a video here about that. And yeah, sure, look, thanks very much for watching, lads, and I'll see you all soon.